Welcome to TradeTheMBI.com. This is John. This report is for the 15th of April, formerly known as Tax Day. Now Coronavirus Extension Day, since everything has been thrown up in the wind. Market, huge rally. There's some people that say, well, we're looking obviously at paint bar. This one's just DeoCon Paint. The regular one. If we go to DeoPaint 2, we end up with our blue candle and the same turnaround green. But they're like, well, are you bullish or are you bearish? And I'm like, I'm neither. I'm just a supporter following what the Fed does and the perceptions that people have at the time given our readings. And the readings are that you're going to get a mix right now of bullish and negative. You've got partial rising, you have mostly falling from a steel short-term standpoint, but you still had the growing red DOC in that, as well as rising shakeout. So that's generally bullish, fine. But within that, we recognize there are some weakness elements. And so you just have to be prepared for volatility when you have conflicting readings like that, when you have everything going all one direction. That makes it easy, but if only life worked that way. As you're learning, there's a mix and a match. And then some people say, well, you've been talking about the fact that companies, well, even the S&P is reporting that, revenues could be 50 to 70% lower than previous. So how can you justify the values? Well, I can very easily. Market works on multiples off the future, off of the idea that if things restart, what the potential is, how much hyperinflation is going to be created by the massive inflow of money. What do you need to value the market if you're going to devalue the dollar by 50%? Does the market need to rise by 50%? And people say, what? And yeah, that's all part of the dynamic. And this is the confusion that's taking place right now. Right now, you have the helicopter money, and everyone's just going with helicopter money. It's going to start to weed out a little bit as real earnings come out and people start to question whether or not things will return as fast as hoped. So from an NQ standpoint, it blows past the 61. Retesting it right now at this particular point, and interestingly enough, you're just about meeting the Azure with the gold. So that was something I pointed out before to be looking for even on the ES right here. We can see it's still rising and just about to meet as well. And when they do, that's usually that point that you look for movement, a turn. There wasn't any surprise that once you got over the 50%, there would be additional pressure to the upside. But again, this is kind of suspect because if you watch it intraday, you can see how it spiked with a short cover and then it just completely collapses back. They pick a threshold, start buying, and then boom, everyone has to buy above that. It starts another little rally, and that's kind of what we're seeing throughout. We'll take a look at it when we look at the 5K chart. Also, you have bizarre things like the euro. The euro is really worst case, or actually best case for the euro is 20 times worse than its worst situation was back when it was down in this 106 range. So how is it above 109? Yeah, well, exactly. So again, you can't worry. Sometimes everyone gets paranoid about fundamentals and things like that. But when federal governments get involved and start coordinating policy to artificially prop things up, well, that's exactly what you get, artificially propped up things. And that's been the reality. The same thing happened in 2011. This isn't new or unique by any stretch. Oil is going to continue to struggle within this configuration here. In fact, you have potential more weakness built into this setup right now. And it really is problematic because you have a huge, it's the same with the airline. They got bailed out. That's going to assist. But it's just handing out money. It's just, it'd be better if they just handed out free lottery to give away airline tickets to individuals than doing the way that you just do with bulk payments, because as we've seen in the past with them, when they bailed them out in 2009 and everything else, then they end up using it for stock buybacks and everything else. So that serves no functional economic purpose when you're trying to direct resources towards actual economic activity, is the best way to describe it from an economic standpoint. creating passive investments is not what's going to be needed. You're actually going to need to be putting people to doing things. But you can't do that if they're going to get infected and everyone's afraid. So, and that's why gold is going to continue to skyrocket. Wouldn't necessarily call it skyrocketing. It's just making a reasonably prudent move. Probably has a bit of a ways to go because it's confused with the deflationary pressures of oil right now. But at the end of the day, it's going to be the only proxy of value, given the fact that currencies are being just completely manipulated, and there's no real basis for their relative value, and that becomes a problem when people are trying to ascertain the essential value of something. So we were following, the market started up from the other day, and we can go back over there and we can look at that. So we started our climb, and again, this is what you get. You get these little bursts, toes, they supported it, and then boom, burst, and then follow through. Same situation began at the start of the day when it was plus 40 some points. And we kept doing the same, and then boom, burst. We ended up seeing this short was beautiful one, and very nice with our Power Mo, as it shows you each of the different pivots. And it's neat to see that where you're still have your cyan under, as well as steel below, you can really follow how that depicts the trend. And it's not until you start to see that magenta activity. Now, of course, here the magenta candle with the BK come in first off of the breakdown that heads towards it. Clean DOC spread with red below the white, it's the green from above, orange, is all the things you look for in a DOC spread. More importantly, though, you really want to see that red move back below zero, because one of my favorites is always having it come from below up towards zero, failing to meet the zero, and falling back down again. Those tend to be the best ones. But it produced nice, these are excellent. Even from the signals, like, we're always talking about right here, this cyan color is, in fact, cyan under red. So even from that standpoint, 28.10 all the way to the BK at 28.27, that's very, very nice run. And then the same from the 26.75 to the buy signal that came in at 28.11. These are fantastic trades that just pretty clean. It's a little bit more murky until you just really recognize how easy it is to follow that trendiness. Now, my concern, and this is something that I debate with a lot, you get your buy signal, and yes, technically you've achieved a weak point in the setup with the rollover. Is it worth the turning of the candle for the color change, or is it best to stick with it? I kind of lean towards the camp of I don't mind exiting, because it's like if I get a new buy signal, I can always buy back in at any time. It's not expensive to get in and out of this market, particularly if you're playing on the shorter side of things, because you know that this can dip down 6, 10, 12, 200 points. So it becomes a risk management issue. It's like, do I mind giving up a couple of points on the upside? Because by the time you get your signal, you're just on the other side of, the 27.18 versus where you're here below, down, with the original one from the yellow gam. That's one half dozen the other. I think that in the long run, if you're able to stick with trades because of the cleanness of seeing the readings like this, because even here where you have a breakdown, you've got your magenta candle, but you're not seeing any action as far as breakdown goes, and then you get your steel reset, and then it turns around, and at that particular point you end up with your you don't have to worry about it in the down pivot side, because in this case there's no up pivot until you get right over here, and at that point that's when it begins to take off back to the upside. But again, you can also follow these two. Same situation that we have when we look at P2s and P3s, which are the pivots of the red DOC at higher levels. Same thing happens here when you end up with lower pivots at higher prices. So perfect high right there, lower pivot, also happens to be magenta candle at that same point, and boom, nice cascade lower. So that was perfectly excellent. You had the warning right here when it came down, it crossed right about this point, right at the same time the steel is crossing, but it didn't cave back below on a real pivot until, well, right about here. And you can see how sketchy it got. You had the dips, huge pumps, and then it pivoted lower again with the cross, and that one was a bit more significant with the magenta turning red there, letting you know that that one was probably going to create more of a decline, and sure enough it did. But again, we're still, you can see the range is fighting between these previously defined algo levels. None of that's changed. So it just becomes a consistency of following what we get with the readings. In fact, I think the ATR bus daily trade is still, let's look at that one. I think it's still active. Yeah. So what was that original entry? I mean, 27.39, and you were as high as 28.40. I mean, 100 points. Probably should have just had the program, pre-designed to sell at a certain point like that. But I mean, at those levels, it's like, is it really worth giving up half that return? Because when you have a move like we had the other day, you can get a 30 to 50% return easily on normal times. Throw in, the added uncertainty of this situation, and it can be significantly more. Needless to say, we're on the right side of it, and that's all that matters. Yeah, I think I'll just leave it at that, because it's becoming clear with the distinction that we're going to continue to see volatility as long as this remains, and until there's an actual plan that is set up that has dates for expected benchmarks of reopening, that will start to clarify the market to a point where they can then look to certain elements and say, okay, this is going to happen, this is going to happen, and that will be defining. So, as always though, trade well. I will be on the Skype chat back and forth. Talk later.